Welcome back to MB Capital Strategies. Today we continue with the mining series. Fresnillo is one of those commodity stocks that really polarizes opinions. For some, it's simply a silver stock. For others, it's a cyclical mining risk with political risk in Mexico. Both perspectives fall short because Fresnillo is neither a classic dividend stock nor merely a speculative vehicle for short-term silver price movements. It is a highly focused precious metals producer that has become significantly stronger operationally in recent years. And that's exactly what you can now see in the initial figures. So the crucial question is not, is Fresnillo still interesting after the recent price increase? Rather, has the company fundamentally improved to such an extent that higher prices are even justified? And that's exactly what we're going to look at today. How am I invested here? Currently, I hold 7 shares. My entry price was €8.33, with a total investment of €58.31. I have received dividends totaling €6.39. Currently, the price gain is €229.60. That corresponds to an unrealized gain of 390% in the positive. Fresnillo is not a diversified commodity group, and that's intentional. The focus is on silver as the main product, gold as a byproduct, with hardly any distraction from other metals. So this means Fresnillo is not a hedge against cycles, but rather an amplifier. When silver is weak, you feel it. When silver is on the rise, this leverage comes through unfiltered. And that's exactly why Fresnillo is so interesting. Not as a defensive anchor in the portfolio, but as a targeted cyclical component. The 52-week low and high here are between 7 and 42 euros, currently at 40 euros and 40 cents. The analysts have set a target of 33 euros here. Investing Pro has set a target of 27 euros and 93 cents. All fundamental figures were analyzed and presented by Investing Pro. If you also want to use Investing Pro through my affiliate link, you'll get a 15% discount. A common misconception with silver mines: high silver prices mean profits, low prices mean losses. That's not the case with Fresnillo. And why is that? Because the company has stable production costs, solid gross margins, and a robust operating margin. The margin shows that Fresnillo makes money even when silver isn't at record highs. This is crucial because it separates cyclical quality producers from mines that only survive during booms. Fresnillo clearly belongs to the first category. At first glance, the profit growth looks spectacular. But the more important question is, where does this growth come from? And this is where it gets interesting. It's not just higher prices, but also better efficiency and a clean cost structure. You can see this in the fact that profits are rising more sustainably and cash flow has grown more than revenue. This isn't just a flash in the pan, it's an operational improvement. It is precisely these kinds of phases that often mark the transition from a cyclical problem child to a serious cash flow producer. Now we come to the most important part of the analysis. For years, Fresnillo has been investing in new projects, expansion, and modernization. That phase was very capital intensive. As a result, cash flow was often consumed. Now we are seeing the results. Operating cash flow is strong, free cash flow is rising significantly, and investments are starting to pay off. This is a classic pattern: capex phase, cash flow dip, and then a cash flow explosion. And that's exactly where we are now at point 3. Despite its cyclical nature, Fresnillo is in a solid financial position. Important: we have sufficient liquidity, no aggressive debt, and no refinancing pressure. What does this mean for us? Fresnillo doesn't have to sell if the silver price drops, there's no pressure to improve, and no need for emergency financing. The risk lies in the share price, not in the company's existence. Now let's talk about the dividend. Fresnillo's dividend is variable, cycle dependent, and not predictable. And that's exactly what makes it honest. Fresnillo pays a dividend when there is cash flow and cuts it when there isn't. No creative accounting, no escaping debt. Not suitable for dividend hunters, absolutely fine for disciplined cycle investors. And currently, the dividend yield is around 1% with a payout ratio of 120%. And we can also see that in 2025, a record dividend will be or has been paid out. Yes, Fresnillo is valued higher today than it was a few years ago, but the company is more profitable, the cash flow is stronger, and the balance sheet is more stable. The market is pricing in quality improvement, not euphoria. Whether there is further upside depends almost entirely on the silver cycle and the ability to continue controlling costs. The risks remain very clear. The price of silver is volatile, there is political uncertainty in Mexico, and the operational leverage is high. But we have no balance sheet, we have no balance sheet stress, we have no liquidity risk. This is a market-dependent risk, not a structural one. Fresnillo is not a core investment, nor a dividend anchor, nor a stable portfolio stock, but rather a focused silver play with a significantly improved fundamental position. Ideal for a precious metal cycle. So my assessment is Fresnillo is not a buy and forget stock, but a very clean cyclical component if you can accept the volatility. This video is not investment advice, but simply my personal strategy. I look forward to any interaction with you. Feel free to leave a like on the video if you enjoyed it. If you're not a subscriber yet, I'd be happy if you became one right now. See you in the next video. I wish you successful investing.